The views and opinions expressed in this broadcast do not necessarily reflect or represent the views and opinions of WBGR Network. Welcome to Let's Talk Money with KC. I'm KC, and I'm the CEO and founder of KC Baker and Associates, and we are a financial brokerage firm. And we have a couple of offices here in the Washington metropolitan area, and we are here for your financial wellness. Today, I'm bringing an amazing show in honor of the Life Insurance Awareness Month. So September is the Life Insurance Awareness Month. And I was kind of cruising through Google and social media and just kind of seeing all the different things that have been popping up this month. It's actually kind of amazing. Looking at some of the statistics surrounding life insurance, it's kind of astounding to know that we in the United States, we have insurance on everything that's replaceable. So we have insurance on our cars, we have insurance on our homes, we have insurance on our apartments, our jewelry, our furs. But when it comes down to making sure that the most important asset is protected, somehow we kind of let that go like it's not important. And looking at some of the statistics, it seems as if even though we know that life insurance is important, 80 to 85% know that it's important, but actually those who own life insurance is around 40 to 50% of some type of insurance, life insurance. So today, what I want to do is I want to kind of go over some of the old life insurance versus the new. And people kind of frowned when we talk about life insurance because we automatically think about death. But really, life insurance is not just for death. So what I want to do is I want to kind of go down and talk about the main life insurances that are out there. And the first one is term insurance. And term insurance is one of the most inexpensive ways to go. But the thing about term insurance is that you're spending a lot of money, for a death benefit, or in the industry terms, what we call the face amount. And that actually goes to your beneficiary. So you get nothing out of that, in life. Now, just kind of think about this. Let's just say that your monthly savings going into that, your monthly premium is $100 a month. Now, you're renting it, it's for a specific term. So 5 years, 10 years, 20 years, 30 years. And then after the term is up, the life insurance is gone. So look at it from a standpoint of trying to get more bang for your buck. So if you're spending, let's say, $100 for a $300,000 life insurance policy under the term policy, you have literally spent over a 10-year period $12,000, Now in these days, we want to make our money stretch. We want to make the dollar go further than it can. So we want to utilize and try to get more bang for our buck in everything that we do within our budget. So why is life insurance any different? So now for $100 for a 20-year term, you've now spent $24,000. And at the end of that term, normally there's nothing. So if you outlive this policy, what do you get? You get absolutely nothing. Your beneficiaries get nothing. Now you have to think about this logically. If you are 30 years old and you get a 30-year term, at the end of that term, you're 60. Okay, so you've spent $36,000 over a 30-year period for a product that now that money goes down the drain. Okay, so we got to kind of look at this more, trying to get, again, more bang for your buck. You want to get more benefits for anything that you do, or anything that you utilize. Okay, now, what's interesting is even the old, there is a rider that's called a return of premium, which means at the end of the term, whether it's 5 years, 10 years, 20 years, 30 years, you get your premium back. Okay, so now I need everybody to kind of look at their policies to see what you have, and whatever it is, make sure you come in and you make an appointment with one of my financial advisors, one of my certified financial education instructors, because it's our job to show you and explain to you and go over with you the fine print. Okay, it's no sense in you putting money in a product that you get nothing out of. Okay, so now think about it again. At the end of a 30-year period, you have just spent $36,000. Okay, you've outlived this plan. Okay, and I think it's actually done by design. Okay, we are living longer. You have to understand and look at your family tree to see how long your father, your grandfather, your grandmother, your mom lived, to kind of gauge the longevity of your life. Okay, so if your mom lived until she was 90 and you're a woman, you want to make sure that you're covered until at least age 90. Okay, so in this scenario that I just gave you, the person that took out this 30-year term when they were 30, so now they're 60, and the term goes away, you have to understand the dynamics of life insurance. The qualifications are your age and your health. The cost per unit, per dollar, is more expensive the older you are. So the cost for a $300,000 policy for a baby is less expensive than it's for a 20-year-old, 30-year-old, 40-year-old, 50-year-old, so forth and so on. Also understand that there are several communities that utilize and understand the dynamics within a life insurance plan. Okay, so there are communities out there that as soon as a baby is born, a policy has been designed for that child. And going a little bit ahead of myself for the new, or making sure that the old were structured properly, okay, that child, by the time they are 25, 26, if funded properly, can be a millionaire, okay, or a multimillionaire. Okay, we have to take a hint from the Rockefellers. That's exactly what they did. Okay, they utilized the structure within the policy to create generational wealth within their family. Now, talking about term policies, no cash value, no benefit to you while you're alive. Okay, the same thing happens if you are working for someone and they are subsidizing your life insurance policy for while you're working. Okay, and that's called group term. Okay, the difference between group term and an individual policy, of course, is that your job is paying for some of it and you pay for a portion of it. But what you have to also understand is that when you leave that job under the group term, that insurance does not go with you. So if you leave and find another job, that policy is gone. And we are in the age now where we don't stay at our jobs for 30 years. That was in our parents' time. Okay, so it's very important that even if you have a life insurance policy on your job, that you have a policy outside of your job. That way it's consistent. Okay, that way no matter what job you're at, you will actually be covered. Okay, so now again, look at your policies, make sure Find out whether you have the term. Okay, I'm going to the next one, which is called whole life. And really, prior to me getting into this industry, I only knew two types, and it was term and whole life. It was either you're renting it or you have a permanent plan. Okay, but there are many more types out there. So let's talk about whole life. Okay, so whole life, you pay for this plan your entire life. Okay, so it's a little different than the term policy, but here again, whole life, generally, you're paying a higher premium, but your death benefit is lower. Okay, so on the flip side, with term, you're paying a lower premium, but the death benefit is higher. But the term is renting, and the whole life, here again, is permanent. Okay, now, your whole life plan, you do have a cash value. Okay, the cash value goes anywhere from 1 to 4%, and every carrier will be a little different, but generally in a whole life plan, your cash value is 1 to 4%. Okay, now, looking at what has been happening in our economy, we want to make sure that we have access to cash. We want to make sure that we are putting money away for the unknowns. We want to make sure that we have an emergency fund. We want to make sure that we have an emergency medical fund. We want to make sure that, for instance, like the furlough, people being off for 37 days, and a lot of people actually had a lot of struggles. But if you're with the right type of life insurance wealth building plan, you have access to tax-free cash. So follow me. Now, this is the type of thing, again, I hope you are liking and sharing. If you're on Facebook Live, you want to let your family, your friends know that this is information that everybody needs to know. Having access to money and being in the right plan is not just for the wealthy. There are strategies and plans out there for the everyday person like you and I. So this information can change the face. It actually can change the dynamics of your family. So please like and share with someone, text them and let them know to get on and watch and listen about the information on the old and the new as it pertains to life insurance. Okay, so now going back to our whole life, again, you pay it for your whole life. When people retire, and you think about it, they cut back their expenses. So in a situation where you want to have a plan to cover you, it doesn't make sense that if you retire at 65, 70, that you're still going to end up paying this plan when your income has been cut. Because we all know Social Security, if we end up being within that generation that actually gets Social Security, it's only about $14,000. Okay, so if you are paying a policy that is $200, $300 a month, and your income goes from, I'm just using this as an example, from $80,000 to $14,000, $20,000, $25,000, it's going to be a little struggle to pay your policy. So again, look at your policies. Make a phone call to us, Casey Baker and Associates. You can dial us at 1-866-586-9522. This is important that you make sure that everybody in the household is covered, not just the mother and the father, but the children as well, because things happen. It's not about an age thing. People get sick, people die. So you want to make sure that you have adequate coverage so that people within your household can continue to live as if you were still there. That's the whole point of it, okay? So we went over term, we went over whole life. So what we're going to do right now is we're going to go to a commercial, and as soon as we get back, I will continue on with the old. See you in a few minutes. Hello, my name is Karen Baker, founder and owner of Casey Baker and Associates. Casey Baker and Associates focuses on promoting financial security through ensuring financial wellness. Our vision is to foster financial wellness by serving the community, teaching wealth-building strategies to all communities, and developing mentorship programs for the young individuals. Casey Baker and Associates takes an educational approach so that everyone in the community can understand the concepts that help to improve financial literacy. As a financial advisor with over 2 decades of experience, I plan to use my expertise to serve you and your financial wellness needs. I am an established author of business and financial articles. This includes writing articles for It's Your Business Quarterly magazine for over 10 years. I also served as the ambassador for the Prince George's County Chamber of Commerce for many years. I am a certified financial education instructor and business leader who is ready to work with you and the wealth-credentialed Casey Baker and Associates team to help you achieve your financial goals. Join us so we can help you, like we have helped thousands of others by connecting with us at www.caseybakerandassociates.com. Welcome back to Let's Talk Money with KC, and we're going over the difference between life insurance, the old and the new. So prior to the commercial, we talked about term, and we rent that, okay? After the term, there is no more. We talked about the money that's kind of being thrown in a pot. After the term is up, that money is gone. We talked about whole life. Whole life, you pay for your whole life. There actually is a cash value within the whole life, but what you have to understand is that in order to actually utilize this cash value, you have to borrow against it, okay? The old plans, they're gonna charge you about 6 to 8% on your money, okay? And you have to pay it back, okay? So now, whole life, you pay for your whole life unless you have what is called a limited pay whole life. And a limited pay means that you pay for it 10 years or 20 years, okay? The dynamics within that plan is a little bit different, but still, here again, you have your cash value, it goes up to about 4%. Generally, you have to pay it back, okay? That money that you borrow. Now, the next one, so we talked about term, we talked about whole life, the next one is universal life. Now, universal life, the difference between that and the whole life is the premiums are a little bit flexible. Okay, you do have a cash value in that one, and it is a permanent plan as well. This one goes up to about 6%. Now I'm talking out of all of the 900 carriers that are within the United States, the base of the plans are up to about 6%. Okay. The crazy thing about your cash value is that it's in the market. So you know right now the market has been pretty volatile. So it goes up and down and up and down and up and down. If you have this money in this pot and the cash value in any plan is there for your unknowns, okay? So now, wouldn't you rather have money in a place where you know it's growing, okay? Whether the rate is, 2%, 3%, 5, 6, 7, 8%, and there are plans out there that give you that within your life insurance on the new side. Instead of putting money away in a plan where you may need access to that for, life happens. And when life happens, you want to be able to have access to cash, right? But if you were to go to your plan and the market dropped, the cash is not going to be the same. So here again, I really, really ask that everybody, the sound of my voice, make sure that you dust off these plans. Take them out of the drawer, take them out of the closet, make a phone call to Casey Baker and Associates so that and it doesn't matter where you are across the country. I have agents all across the country, so we cover the entire 50 states. So you're covered, okay? You contact us by calling 1-866-586-9522, okay? Or you could go to www.caseybakerandassociates.com, or you can email me at Karen at CaseyBakerandAssociates.com. Okay, we will do a complimentary, hear me once again, a complimentary needs analysis. And what this will do is this will allow us to help you with your goals, your financial goals. It's all about starting. You have to start somewhere. Okay, everybody needs to have this coverage. Okay, start, even if you take that $5 that you go to and get coffee with every morning. Okay, so that if you saved $5 every day, that's $150 a month, putting towards your whatever it is on the new side. Okay, and we'll talk about that a little bit different. We'll talk about that a little bit later. Okay, so now we've gone over term, we've gone over whole life, and now universal life. The last one actually is called variable life. Now, variable, anytime you hear the word variable, that means everything's in the market. It doesn't matter. Your death benefits, your cash value, everything is in the market. Okay, you're kind of playing Russian roulette with a plan that you really expected to have in the future. Okay, so again, we need to do this assessment. We need to make sure that everybody understands that there is something out there for the average person. You don't have to be making $1 million to be able to get yourself in a place where you're covered. Okay, you got to protect yourself. You got to protect your family. Okay, we don't want to leave bills. We want to leave a legacy. It's all about preparing yourself to change the face of your family by leaving a legacy. Okay, so now let's talk about the new. Okay, so the new. What happens in the new? The new plan is called the Indexed Universal Life Plan. And whenever you see that term or that word indexed, that simply means that your money is going to grow, okay? And it's not going to be in the stock market, okay? It mimics the gains of the market without your money being tied to the market. So let me explain that again. Indexed Universal Life. Whenever you hear that term indexed, that means you have the best possible plan. Your money will never lose a dime. So when the market actually does go down, your money stays constant, okay, because it's not in the market, okay, it's not tied to the market in any way, okay. That's just a crediting strategy that is used to make sure that your plan grows, okay. So if you think about the old, okay, the old, even though with the cash value in some of those plans that were permanent, okay, you kind of have to jump through hoops to get them. On the new side, you have access to your cash value, okay? Your cash value grows right now in between 6.6% to about 7.25%, depending on the carrier, okay? Which is really great because even if you have your money in the bank, you're not getting anywhere close to even 4% in the bank. Okay, if you were to put it any place else in the market, yes, there's a guarantee. There is a chance that you may hit 20%, 15%, 30%. But there's also a chance for that thing to tank like it did in 2002 because of the dot-com era and 2008 because of the real estate bubble. So for me, I don't want to lose a penny. I don't care if it is within my my emergency fund, whether it's my savings account, whether it is my play account, whether it's my emergency medical. It doesn't matter. You want to make sure that your money continues to grow. So in this index universal plan, it is a permanent plan. Okay. So this plan goes to 120 years, 120, okay? Most of these plans, even with the old, you want to make sure that they're being paid off at a certain time, but policies generally are paid up in about 30 years, depending on your age, 15 years if you're younger, Okay? So you're paying into this plan, this wealth building plan, to give you access to this cash value. Okay, now all you have to do within these new plans, everything is online. You can borrow against yourself, okay, but you don't have to pay it back, okay? The difference here is if you have, let's just say, $50,000 in your cash accumulated cash value account, okay, that money can be used for anything. They're not going to come after you and make you jump through hoops because you want to use your own money. So that money could be used for college savings. That money could be used for down payment on a home. That money could be used for, you just want to take a vacation. It's your money. It doesn't matter what you use it for. So you have to understand the difference between having the cash value in what we call an IUL, the Indexed Universal Life, versus the whole life, the variable life, and the universal life. So in these plans, it's kind of a dual role. Okay, this cash value actually can be used as an extra income, stream of income when you retire. You can totally turn this plan, your life insurance, wealth building plan, into another stream of income. So you can do a self-created pension. Okay, so here again, money that you're putting in, for instance, going back to that term product where you put in 24,000 or 36,000 or whatever you put in it, wouldn't it be great to have access to some of that money? Okay, and you can utilize it and you be your own bank and borrow against it tax-free. Again, it's a strategy, but it's a strategy that has been around for centuries. And we want to make sure that everybody understands that you can have it too. It's painless. Really, truly it is. It's just a matter of sitting down with us here again so we can kind of go over, find out what your goals are, find out, whether you want ways to make sure that you're putting enough in there so that when you do retire at 65, 67, whenever you want to retire, retirement isn't an age. It's really how much money you have saved, and it can kind of come to you continuously. Within these IUL plans, within these Index Universal plans, you actually have a lifetime income. So let me say that again. Within these plans, you actually have a lifetime income. So now you have created a strategy. We've helped you create a strategy now that you have money for unknown. So if something happens and the furlough happens again, you have access to tax-free money. Okay, if nothing happens and life just kind of continues on, then you can just let that sit, and at a certain point you get a income every year. Okay, another thing that's really, really crucial, you got to think about when life happens and you end up getting sick. Okay, this is something that really makes people lose everything that they've worked so hard all their life for. So soon as I come back from this commercial, I'll talk about the benefits to you even when you get sick within these amazing wealth building plans. We'll be right back. Hello, my name is Karen Baker, founder and owner of KC Baker and Associates. KC Baker and Associates focuses on promoting financial security through ensuring financial wellness. Our vision is to foster financial wellness by serving the community, teaching wealth building strategies to all communities, and developing mentorship programs for the young individuals. KC Baker and Associates takes an educational approach so that everyone in the community can understand the concepts that help to improve financial literacy. As a financial advisor with over 2 decades of experience, I plan to use my expertise to serve you and your financial wellness needs. I am an established author of business and financial articles. This includes writing articles for It's Your Business Quarterly magazine for over 10 years. I also served as the ambassador for the Prince George's County Chamber of Commerce for many years. I am a certified financial education instructor and business leader who is ready to work with you and the wealth-credentialed Casey Baker and Associates team to help you achieve your financial goals. Join us so we can help you, like we have helped thousands of others by connecting with us at www.caseybakerandassociates.com. Thank you so much for coming back. You're here with Let's Talk Money with KC. We're talking about wealth building strategies now within the new portion of life insurance. And we're talking about Index Universal Life Plan. So right before the commercial, we were talking about the cash value and how you can utilize the cash value for really anything. We can set that policy up for you and have it designed for whatever you want. You could have it designed for college savings. So not only for your policy for your children, but your children's policy can be set up where between 18 and 21, you can take money out specifically for their college versus that 529 plan, which really is not good on the customer side. Of course, it's good for the state because they get to keep that money if you don't go to school. In a situation where you have it within your wealth building plan, it's there. If the child doesn't go to college, then that child can use that money when they're old enough to use it for when they get married, or again, take the money out for a down payment on a home. So you have more options, you have more flexibility, and that's what you need in this day and age. You want to make sure that you have several streams of income. In retirement, you've got to have several streams of income. You cannot just base your retirement on your 401k, your TSP, your 403b, your 457, your IRA. That's a whole nother show. That's the next show. But what I'm saying here is that you can set up these wealth building plans to do whatever you want. Again, the cash value in these plans are anywhere from 6.8% to about 7%. The great thing is that the strategies will allow those plans to be either capped or uncapped, meaning if it is uncapped and the market does 20%, then of course then your cash value will actually get 20%. Again, the money is not in the market, it's not tied to the market, but the strategy is to mimic the gains of the market. That's it. You get no losses at all. Okay, now, again, we talked about the emergency fund, but the living benefit. What's great about the living benefit is we all know that someone that has had a stroke or a heart attack, diabetes, someone who's been in a coma, someone that's gotten paralyzed, someone who has a terminal illness. These plans are designed so that if you have any of those issues and you cannot perform 2 out of the 6 daily living activities, like eating or bathing yourself or going to the bathroom by yourself or dressing yourself or transporting yourself from point A to point B, you actually qualify to get a check that is between 80 to 90% of your death benefit. So depending on the carrier, determines whether it's 80 or 90%. So let's just go back to that 300,000 that we were talking about with the term policy in the old. Okay, so let's just say you have a policy that's 300,000. Do you know if you get sick, you get 240,000, and that's a tax-free check that they send you? Uncle Sam cannot tax that thing. Why is it that everybody is doing these old plans when, again, the wealth building plans allow you to have access to tax-free money? Now, if you're on a plan where you have the carrier allows 90% of your death benefit or your face amount, that's 270,000 that they cut you a check for. That's tax-free. Uncle Sam can't tax that. Okay, so here again, I need everybody to tell everybody, these shows are recorded. Tell them to go and listen to it. because this is serious. This is the difference between somebody being sick to the point where they can't work. And I know that you get short-term, long-term disability on your job, but short-term, long-term disability on your job is not going to give you $240,000. Okay? Actually, what happens is they give you only 60% of your money. Okay? Or 70%. Each company is a little bit different, but still it's not 100% of your check. And if you need 100% of your check, then something's going to get cut off. You're in a deficit. Where are you going to get this extra money to put food on the table or to pay doctor's bills because you're in the hospital? And every time somebody walks into your room, that's a bill. And the health insurance does not pay for everything 100%. So you need to have access to cash. You need to have access, and you need to have these pools of money so that whatever happens, whatever the unknown is, whether you become ill, whether you die too soon, or whether you live too long, you have all of these plans set in place so that you're covered. It does not make sense to work all of these years, 30 and 40 years, to build up all of this property and all of these assets for something to happen, a car accident. And that was me. I was in a car accident and I was in a half body harness. So you have to prepare. It's all about the preparation. Okay, so here again, I'm Casey with Casey Baker and Associates, and we are a financial brokerage firm. And we have 2 offices, one at the National Harbor and one in Tysons. I have agents all across the country, guys. So it's no excuses to pick up the phone and dial 1-866-586-9522 or go to www.caseybakerandassociates.com or email me personally at karen@caseybakerandassociates.com. I also want to talk a few minutes to our business owners, understanding that these wealth building plans are here for you as well. Okay, this is an amazing policy for a key man policy or a buy-sell policy for partners. This is something where we could also talk about succession planning and continuation planning for the business owner. This is also something where you could actually have us come in and do supplemental benefits, meaning that we come in and your staff can actually get access to these wealth building plans. You can decide to put as much into it as you want or not. Okay, we do payroll deduction. So there are carriers out there that will actually do payroll deduction. And the qualifications, just one, you have to have 3 employees that will participate. Another one, 5 employees to participate. So this is something also business owners that will set you apart. It's all about being competitive. It's all about standing above your competition. We want to make sure that we keep our good staff. We want to make sure that we take care of our staff, that they come and they work for us, whether it's 9 to 5 or 9 to 9, it doesn't matter. So this thing here will help you create a distance automatically on the benefit side for your competitors. So let's just do a little recap. Okay, so we talked about the old term insurance. You're renting it. No cash value. We also talked about whole life. Yes, it's a permanent plan. Okay, but you pay for it your whole life. It's generally more expensive than term. So your premium is going to be higher, but your death benefit, your face amount is going to be lower. Then we talked about universal life. Okay, the difference between whole life and universal life, your premium is a little bit flexible, meaning if something happens and you need to lower it for a period of time, that can happen. They're both in the market. Your cash value is in the market. So if the market goes up, depending on the strategy that's used, you may gain. But if the market goes down, you're gonna lose. okay? And then the variable life insurance plan, which just means that everything pretty much is set in the market. The difference between all of the old that I just talked about and the new is that it gives you options. It gives you options. It gives you access to cash. So now on the new side, your cash value here again is turned into your emergency fund. You can also use it as your emergency medical fund. It could be your play fund. It could be college savings. It could be a down payment for a home. It could be a down payment for your wedding. It could be your money. You borrow against yourself. If you decide to pay it back, fine. If you don't, what happens is, let's just say you took out $10,000 and you didn't pay it back and you went home to glory. So your beneficiaries in that $300,000 death benefit face amount scenario, your beneficiaries would get $390,000. Okay, so again, business owners, this is a godsend. It really is. It allows your staff not to be stressed out when life happens. This is something that we can set up individually however they want to set up their plans. Your amount that you're going to subsidize could be the same amount that you're doing for your term, the group term, or it could be more. Okay, it just depends on you. That's all based on you. The carriers actually do the payroll deduction, like I said. There are several of them that do that, and anywhere from 3 employees to 5 employees, and they will actually do the payroll deduction for you. It's important, all businesses, you sit down and you talk with us about making sure that you do have a business succession plan, that you have a business continuation plan, so that if something happens to you, that your business still continues on. That is so important. It doesn't make sense to have a business for 20 or 30 or 40 years and you're the sole owner, and then there's no plan for, well, what happens if the head person dies? So again, make sure that you reach out to us. I'm KC with KC Baker and Associates. We are a financial brokerage firm, and I have 2 offices here, one at the Harbor and one in Tysons. Okay, I have agents all across the country, so it does not matter whether you're here locally or not. So you can contact us at 1-866-586-9522. Okay, make sure that you all share this, you like it. Make sure that you tell everyone that there actually is something else out there to help. People are struggling. People need ways to save money. People need ways to make sure that during the retirement phase or before the retirement phase that you actually plan so that you have more than one stream of income. I'm going to be talking about retirement the last Thursday of this month as the second phase to today. So we'll talk about that then. But it's real important that we update, upgrade, and we change our mindset when it comes down to life insurance. It's not for death. Life insurance is for life. It gives you options. It gives you extra money. It gives you tax-free money in a lot of different instances. We can turn that into another stream of income for you again when it's time for you to retire. So again, thank you for tuning in. We will be here again next week. KC with KC Baker and Associates, tuning out. Thanks again.